Welcome back, everyone in YouTube land. This is your tinfoil hat economist coming back to you at the speed of light with episode number 6, entitled Warning! Exclamation point. Gold is in a bubble! Exclamation point. So, let us review. I had our graphics department redo a recent graph on gold prices adjusted for inflation by the CPI. And here we go. And you can see gold was worth, $910. This is in current dollars in March of 1970. It then fell 42% July of 76 to 531. It hit its all-time peak, the all-time peak ever, way back in January of 1980, 22.48 in current dollars. The next 20 years were grim, my gold bug friends. Grim, grim, grim. You lost 83% of your capital in the next 20 years in gold, and you didn't collect any interest or dividends. You are losers. So gold went all the way down to 380, August of 2001, adjusted for inflation. It then did go back up to, let's call that the second all-time peak, 2078 in August of 2011. You might have thought, oh, I might actually get my money back after 40, 30 years. No, because it immediately collapsed down to 1167 in December of 2015. You lost another 44% plummet. And now it's gone back up to 1676, which I call bubble territory for gold. Warning, Will Robinson. Warning. Danger, I should say. Danger, Will Robinson. Danger. Okay, so let us retreat a little bit into the topic of if there even is such a thing as a bubble. Many very competent economists contend there is really no such thing as a bubble, that the market price for a piece of property, an equity, a bond, is continuously adjusted by thousands of players, and it's just an estimation of the future prospects, present and future prospects for that investment. So everything is never in a bubble or a reverse bubble. You could also say many asset groups are in a reverse bubble, since they appreciated quite a bit from after the Great Recession of 2008-9. Markets went up, doubled and doubled again. That doesn't mean they were in a reverse bubble or that they're in a bubble now. It just means that market sentiments, expectations go up and down because prospects go up and down because the world is a complicated place. As we now see with coronavirus, and we see some travel and hospitality listed issues off 25, 30%. They weren't in a bubble before, and I suspect they're actually pretty cheap now, but we don't really know. But I disagree with economists on this point a little bit. I contend that a cruise line with ships that cost money to build and have to be designed, and advertising, and a lot of infrastructure goes into that, or an apartment building in Monrovia, California, IBM stock. These things have value because they can generate income or profits in the future. It's uncertain, it's never guaranteed. There's some underlying value to these things. Now, when we go over to gold, collectibles, fine art, these things are very insubstantial, ephemeral. What is gold worth? It has some value as jewelry. It is used in industry. Gold plating is a valuable process because of gold's ability to resist any sort of tarnishing or oxidization. But there really is no value to, say, a fine art painting. Fine art prices have just exploded. You've probably seen these headlines, $250 million for this or that painting by a well-known artist. Some not so well-known sell for millions. I recently saw a canvas painted red, 4 slashes in it from a knife, and it was worth a couple $1 million to somebody. Don't ask me to explain it. But these things like gold and diamonds and jewelry and fine art, the value is what someone else will pay for it in the future. Now I understand that's the same thing as a quadplex in Monrovia. The value of that quadplex apartment building in Monrovia is what somebody will pay for it 10 years from now, say. But that will be based on rents. We have some idea what rents will be in 10 years. Gold or fine art or a beautiful collector. I love these antique restored cars. But the value is completely speculative. So that's why I say I think gold is in a bubble. Look at this chart. It's heading back up to bubble territory for gold. So, let it get up, if it gets up a couple more $100, you might want to get out of gold. And it looks like it's in bubble territory. So this is your tinfoil hat economist signing off at the speed of light. And I look forward to seeing all of you in episode 7, in which we will address helicopter drops once again.